Food prices in China hit a 7-year high, according to China's own data. So I was not planning on doing another live stream show, but honestly, I'm tired of being called a liar, misleading, and a bunch of other names by people who are perma-China bulls, who are China trolls, and China apologists. So I'm going to do the show and talk about the food price data that came out last week. So according to China's own data, this is from the National Bureau of Statistics in China, not from CNBC, not from Bloomberg, not from anywhere else. This is from a Chinese source. China had an average of 9% increase and 9.1% increase in food prices this July from a year ago. Now that's the average. There's food prices that are up a lot higher than 9%. Let me read you some of the food prices that are up more than 9%. So pork prices rose 27% from a year ago in July, while fresh fruit prices rose 39.1%, the data showed. I have some others. Let me pull up this tweet that talks about some of the other food price increases from someone who actually dug into the data. Oh, and by the way, guys, doing research on this yesterday, preparing for the show, I was on the National Bureau of Statistics website, the English version, and the website was fine for me yesterday, and then I just went back to the website, and now I have a 404 not found. Looks like my IP address has been flagged. So it looks like I'm on the naughty list for China. So even though their own data says that food prices are higher, apparently you're not allowed to talk about the truth anymore. Okay, so here's the food price. As promised, here's the more analysis. So pork is up 27%, fruit is up 39.1%, eggs are up 11.4%, poultry is up 7.6%, vegetables are up 5.2%, and food overall is up 9.1%. Just an enormous number, okay? China's getting killed with stagflation. And if you guys paid attention about 2 months ago, if you'll remember, one of my best sources in China was talking about how there was going to be a lot of food price increases that he was seeing and hearing from other people inside China, in mainland China, that food prices were going up. Only 5 people watching. That's kind of weird. So there's a combination of factors here with the Chinese economy. You have currency devaluation, you have their credit bubble, and then you have the African swine flu, you have the armyworm, and you have some other problems there with their agriculture. And in general, according to the World Bank, China is land poor and only has 20 acres of arable land per 100 people. So China has had to, I looked this up also for research yesterday. I went to the World Bank website, which they have a website called the World Integrated Trade Solution, which tracks total imports and exports by country or by categories such as agricultural raw materials. And China's amount of agricultural raw material imports since the year 2000 has gone up about 6-fold. So China's not independent. China has to import now a lot of food, a lot of agricultural raw materials. They have to import a lot of energy, and they have to import a lot of metal ore. So there's a lot of China bulls and China apologists and China trolls out there that say that China's fully self-sufficient, that America needs China totally and completely, and that China can do whatever it wants, but that's just not the truth. The data shows otherwise. Just like the data from the China's National Bureau of Statistics says that food prices are up. I did not make this up. Bloomberg did not make this up. CNBC did not make this up. One of the China trolls yesterday was telling me that CNBC, it was a CNBC article, he wouldn't even read it, and yet it was quoting China's own data. You can't make this stuff up, guys. It's just ridiculous that I even have to talk about this. So thank you for everyone who is a Patreon account contributor. I have over 80 now, so that's really good. We're starting to make some progress. And for PayPal, I think over a half a dozen now who are monthly contributors on PayPal. So that's even starting to add up. But just a crazy amount of things right now. A lot of the stories that are coming out are on China. I will, of course, cover many other things. Simone Giannotti asks, can we expect the same prices increases in Europe? Probably the European inflation data will not show this. They're going to be screaming at deflation. And for the China trolls and perma China bulls and China apologists out there, why would China over-report their food price increases? So why would China lie about higher food prices in their own data? Okay, it makes no sense. From my experience with government statistics and government inflation data, and I've been doing this for a decade now, looking at different numbers and interviewing different experts. I've interviewed Ed Batowski. I've listened to many interviews from John Williams of Shadow Stats and others. I've listened to even interns from the Federal Reserve listen to how they gather the CPI data. I've even listened to interns talk about that. And how the interns will go to Walmart or Target or grocery stores. And the interns, these are people from George Washington University or Georgetown, if they're at the main Federal Reserve location here in the Washington, D.C. area. And so these are book smart kids, but all they're doing when they're an intern and doing that, they're only just recording the price. They're not looking at cost per unit. And that's where the consumer is getting killed with stagflation and shrinkflation, which, by the way, higher prices is not inflation. Higher prices are an effect, not the cause of inflation, according to the Austrian School of Economics. So more money supply, more credit is the cause. And then that causes distortions and misallocations of capital throughout the global supply chain and in the economy. And that's what causes tariffs also cause. I explained this in the last couple weeks. Tariffs also cause higher inflation because they put higher costs into the supply chain. Hey, Rob, there's so many bubbles. There's so many bubbles. I just think the point I'm trying to make, I don't hate China. The point I'm trying to make is that I'm just tired of the gold community repeating that China's importing all this gold and they don't have any credit bubble. They don't have a debt problem. Their economy is so much better. You know, all the normal Peter Schiff talking points. It's just ridiculous, man. The Peter Schiff talking points are easily anyone who is a global macro person who spends a couple hours doing research can easily counter the Peter Schiff talking points. And yet it's repeated verbatim. I had some guy who's a longtime loyal listener on the Wall Street for Main Street Facebook fan page copy and paste all the Peter Schiff China talking points a few days ago. And it's like, dude, do you even listen to my podcast anymore? I mean, a lot of the stuff there that China's manufacturing is good and that China doesn't have any debt and all this other stuff is just, it's totally ridiculous. Things have changed so much in the last 10 years in China. Look at that short video I just put out a couple hours ago. That chart, 6.75 units of credit for 1 unit of GDP. That is insane. I'm not saying the US doesn't have problems. I'm saying China now is in that same group of problems with the European Union and the US. And the narrative that's still repeated is that only the US and the European Union have problems. There's still that narrative going around the gold community. It is ridiculous. I'm sure I'm going to get emails. But I would tell you guys, my buddy who's a computer expert and programmer, and he just checked the China's National Bureau of Statistics website in English, and he was able to see the website. I can't see the website anymore from this IP address on my laptop. It's gone. A 404 not found error. So I guess I'm on a list now. I'm on a naughty list. So let me read more of this article here from the CNBC article. China's July food prices jumped 9.1% from a year ago. Data from the National Bureau of Statistics showed on Friday as the country battles soaring pork prices amid the spread of African swine fever. In particular, pork prices rose 27% from a year ago in July, while fresh fruit prices rose 39.1%, the data shows. And remember, this is not CNBC guessing at the data. They're quoting Chinese data. Okay, so if you're a pro-China person and you're calling me a liar, the data is from China. It's directly from China. The July figures follow an 8.3% year-on-year jump in June. Non-food items in July were 1.3% higher, government data showed. Chinese fruit supply has been hurt by severe weather that hurt crop production this year, sending prices of apples up sharply. China is the world's largest producer and a major consumer of the staple fruit. The official inflation data came after China confirmed Tuesday it will be suspending imports of agricultural products from the U.S. in response to President Donald Trump's new tariffs. U.S. exports of fruits to China have already been falling in the last year, with fresh fruit exports falling to 123 million from July 2018 to June 2019, down by about half from 239 million the previous year, data from the U.S. Department of Agriculture showed. The U.S. Department of Agriculture said in a June report that the U.S. remained China's top Northern Hemisphere supplier for apples, even with a 50% tariff on the import of the fruit. Overall, China's consumer price index rose 2.8% from a year ago in July, slightly higher than the 2.7% analysts in a Reuters poll had expected. But remember, the food price increase is at 9.1%, which is a 7-year high. And I don't think it would be in China's interest to over-report the inflation data. If you disagree with me, you can comment. But from my experience of looking at different CPIs and inflation data from different governments, normally it is the government's in the government's interest to under-report the real inflation rate and the price increases. The effects are the price increases. Quote, surging pork prices continue to push up consumer price inflation, end quote, said Julian Evans Pritchard, senior China economist at Capital Economics. But, quote, weakening demand dragged producer price inflation into negative territory last month, end quote. So the producer price inflation stuff has to do with Chinese factory Chinese factory owners who are overproducing a lot of goods that there's little or no demand for, declining demand for. Which means they have a big inventory buildup, which also means that they can't sell their goods. And the big inventory buildup, either the inventory is going to sit there or they have to rent or buy new warehouses to put the inventory, and they're producing goods that there's no one else wants, or demand has declined a lot, which means they should stop producing, but they're not going to stop producing. And I've addressed this many times why. This was the first time China's PPI, a gauge of corporate profitability, fell in 3 years, adding to concerns of deflationary risks in the world's second largest economy. I would not call this deflationary. I would call this stagflation, because you have the worst of both worlds. The people who are selling the goods have lower prices, which is good for consumers, but bad for the people selling the goods. And then you have the consumer in China having to deal with higher prices. So that to me would be worsening stagflation, which would make a lot of sense with the trillions of dollars in misallocated capital that China now has in the last 10 years. This comes as China and the U.S. continue to be locked in a prolonged tariff battle that has dragged on for more than a year. Both countries have slapped additional levies on billions of dollars worth of each other's goods, and the escalating tensions has spooked world markets and hurt the global economic outlook. With accelerating consumer prices and the return of falling producer prices, quote, the upshot is that China faces the worst of both worlds, end quote, wrote Pritchard Evans. Yeah, they didn't mention stagflation, though, because stagflation in regular mainstream finance is a really dirty word. Stagflation is like dropping the F-bomb on live TV, saying bad stagflation or stagflation. I have another article talking about how farmers now, this was out today, farmers now are very pissed at Donald Trump. So there was a farming conference, I think, in over the weekend. Let's see here. American farmers are attacking President Donald Trump in the wake of a new hit from China, which comes as part of the lingering trade war between the countries. Trump's, quote, strategy of constant escalation and antagonism, end quote, has worsened the situation. Roger Johnson, the president of the National Farmers Union, the nation's second largest general farmers group, told Bloomberg, family farmers and ranchers, quote, can't withstand this kind of pressure much longer, end quote. He added, it's really getting bad out here. Bob Coylan, a North Dakota farmer of 35 years, told CNBC, Trump is ruining our markets. China canceled all purchases of U.S. agricultural products last weekend. The retaliatory action came after Trump announced 10% tariffs on an additional $300 billion of Chinese imports set to begin in September. China's move is a, quote, body blow to thousands of farmers and ranchers who are already struggling to get by, end quote. Zippy Duval, president of the American Farmer Bureau Federation, told Bloomberg. American agriculture exports to China dropped by half last year due to Trump's trade war, and farm income fell by 16%, Time reports. And over the last 5 years, net farm income has plunged by nearly half. from 123.4 billion in 2013 to 63 billion last year. So that's just in the US. So there's a massive drop off. Farmers unloaded on Agricultural Secretary Sonny Perdue last week at a listening session at the annual Farm Fest in Minnesota. Gary Werdish, president of the Minnesota Farmers Union, criticized Trump's go-it-alone approach and the trade wars' long-term devastating damage. Brian Thalman, president of the Minnesota Corn Growers Association, attacked Trump for saying farmers were doing great again. Quote, "We are not starting to do great again," end quote, he said. "We are starting to go down very quickly." Others expressed concerns that trade will be lost forever. Quote, "There is a lot of stress out there," Perdue conceded at the listening session and attempted to reassure farmers that markets will return once a deal is negotiated. But he also scolded the crowd of thousands. "If your solution is to forget about what China has done and sell and trade with them anyway with cheating, then I just fundamentally disagree with you." The Agriculture Secretary also appeared to indicate that farmers were whining too much, joking, "What do you call two farmers in a basement? A wine cellar." The Minnesota Farmers Union responded in a tweet writing, "Farmers are not whining. Their ability to make a living is threatened. We won't stop talking about it until this reckless trade policy stops." Trump has talked about coming up with multi-billion-dollar farmer subsidies that could cushion the cost of his trade war. The Trump administration has already rolled out 2 rounds of farm bailouts expected to total $28 billion. So we're up to $28 billion now in farm bailouts. No other industry hurt by the trade war is receiving taxpayer aid. Werdish cautioned that the aid would undermine public support for all federal farm subsidies, noting that it's already being blasted as a welfare program. Yeah, I'm not in favor of any subsidies. It's just ridiculous. But unfortunately, the agriculture sector in the United States is a mess. Whether you want to talk about GMOs and the factory farms and the poor treatment of the animals and other things. 9 out of 10 countries that voted for Trump in the 10 counties, 9 out of 10 counties that voted for Trump in the 2016 election. 2,300 counties have received the farm trade subsidies, according to Washington Post analysis of data from the Environmental Working Group. So there's more to the article. I'll attach it if you want to read it. The trade war, both sides are subsidizing with the trade war and with China's African swine flu epidemic. My source in China, who, by the way, 2 months ago, guys, was talking about this. This source in China, who's my best source, he was talking about these food price increases 2 months ago, how they would be big. And I got literally dozens of nasty comments under that YouTube video about 2 months ago, calling me a liar, saying I made up the source, saying I was wrong, saying I didn't know what I was talking about, calling me a moron, bunch of other names. Just ridiculous. A lot of them were probably paid trolls. So, and then on the US side, you have enormous subsidies too. So both sides, this thing I think is the US and China are going to be in a prolonged trade war, prolonged currency war, and it's looking like very similar, at least economically, to the Cold War between the US and Russia. Although we haven't seen massive amounts of military buildup, but one of my buddies sent me an email today that I think the U.S.'s $2 billion arms deal with Taiwan is going to go through, and then you add up how China's really pissed off that U.S. diplomats are meeting in Hong Kong with the Hong Kong protesters, and then the U.S. was talking about putting medium-range missiles, I think, around China. So, I mean, this is similar Cold War tactics to what the U.S. and the Soviet Union did. This is starting to repeat a lot of the same mistakes of the Cold War, if you ask me. Peter Schiff is an Austrian school economist, but I don't think he applies Austrian school principles to China. I don't think he spends any time researching China. Because if you spend a couple hours researching China, looking over their debt to GDP ratios, how quickly their credit is growing, how much credit is needed to increase GDP, how much household debt there is, their housing bubble and real estate bubble, how much trillions of dollars in misallocation of capital, their worst GDP in 27 years. You know, adding all those things up, I would not have if I was objective about this, I would not have the same opinion as Peter Schiff. Let's just put it that way. I respect Peter. I think he's a brilliant Austrian school economist. There's many things I disagree with him on, though. So, Simone, I don't think we're going to see the same pricing. In reality, you may see the same price increases in Europe. Normally, what the food companies do and the restaurants do is they tend to not raise the price a lot. What normally happens, the food price or the menu price, either the food price at the grocery store or the menu price at a restaurant, what normally happens is there may be a slight increase in price, but normally the portion size declines a lot. I've been noticing this a lot at the grocery store and a lot at restaurants lately. It's been increasing, especially in the last like 4 to 6 months. There was some restaurants where I went to this pizza place. It's a chain called BJ's Restaurants here in the United States, and they have really good deep dish pizza. But from what I've noticed on their menu, what used to be a medium pizza at BJ's now is now considered the large pizza. So the size of the large pizza is down a lot, and the menu price, I think, increased by $4. And that's just in the last couple months. So, and there's tons of other examples. There was a Taco Tuesday I used to go to about 4 or 5 years ago, and used to get, I think, 3 tacos for $9 or something. It was like it was $2.50 per taco, and then they jacked the price up quite a bit, and then they ended Taco Tuesday. So it went from like on a Taco Tuesday at this good casual dining sit-down taco place I used to eat at, it used to go from like $2.50 for a taco with a lot of meat on it, and it was a good taco, like chicken and steak and pork tacos. You had your choice. And then it went to like $3.50 a taco, and then it went to 2 tacos for like $9, and then it went to it went from the price went to 2 tacos for $9, and it just kept going up. And then Taco Tuesday ended. No, it wasn't Taco Bell, guys. Dave, it wasn't Taco Bell. I think one of the reasons that I'm feeling healthier is I stopped eating at Taco Bell. I stopped eating at Taco Bell years ago. Although in the past, when I used to get out of the gym, like late at night lifting weights, there used to not be any other places open, really, except for Taco Bell. So either I wanted to cook the food myself and I was too tired to cook, or I just get like some of those grilled chicken tacos at Taco Bell, a couple of them. But that was years ago. Yeah, it's being called shrinkflation, Plant Doctor. You say your business is you sell wholesale to restaurants for a living. Everyone, even the fanciest spots, looking for deals, cheaper secondary cuts, doing plate. There's also substitution. There's a lot of substitution of ingredients. So the labels could be very, very misleading. If you guys want to be better consumers, I encourage you, again, this is not financial advice. This is just like common sense, being a personal finance and consumer, that look at cost per unit. So the price may not change at all, but your cost per unit is soaring in a lot of aspects. And the grocery store is required to put cost per unit on. So cost per unit, if you were to compare cost per units from a couple years ago to now, you're paying a lot more in cost per unit where the price may not change. The RMB fell every day last week. Yeah, that's because there's net capital outflows out of China. There's a lot of net capital outflows out of China. I was talking about this yesterday, that the history of emerging markets is when there's a rapid amounts of net capital outflows, and they're running a current account deficit, and then they're running a dollar peg. If you go back and look at the Asian tiger crisis of the 1997 and then Argentina in the 90s, their hyperinflation in the late 90s and early 2000s, there was a lot of similarities between then and what's happening to China now. There's a lot of similarities. I have links to the historical analysis in yesterday's live stream show. If you're not familiar with what happened to those Asian countries in the 1997, they were running dollar pegs, and then they started running current account deficits that they had not run, and their currency became under pressure. The peg broke. They had enormous capital inflows because the interest rates were higher in the emerging market countries relative to the interest rates in the US, but then the capital started to leave and there was net capital outflows, and then boom. So I would monitor net capital outflows. The gold community, I've been following a lot of the work and a lot of the experts in the gold community for a very, very long time. And no one in the gold community, everyone talks about the gold that comes into China. No one talks about capital outflows out of China with people in China who want to get their money out, get their savings out. None of them. So you have to balance that. You have to look at the net of gold coming in versus other capital savings in RMB and people who are investing in stocks and bonds leaving China. And that will give you a sense, because if there's a lot more net capital outflow out of China versus gold coming in, then the gold will not save them. Let's not talk about Jeffrey Epstein on this podcast. Come on, guys. My Twitter has been talking about that. If you want my opinion, you can follow me on Twitter. You know, there's a ton of blue checkmark people that will not say their opinions now because they could get fired. That is so ridiculous that we live in a world, in the United States now, where if you have free speech, you are risking getting fired for. It is ridiculous. So you have these blue checkmark people with 50,000, 100,000 or more Twitter followers, and they can't say what they really feel because then they're risking getting fired. And some of them work for Fox News, and they still can't say it. Yeah, the Thai baht crashed against the dollar. I believe they're running a dollar peg. And so just because a country is running a dollar peg does not mean that it's not going to break. Who knows if Jeffrey Epstein is alive? I don't know. My educated guess is most likely he is dead. There was over a dozen of my friends who were predicting as soon as he was arrested that he would never get to testify. Thanks for the $10 super chat. Dan Davidson, anti-troll pig, says oink oink. Hey man, I got a 404, so on that website, the National Bureau of Statistics of China, I'm not allowed to visit there anymore. And I was only on there like for a minute or two. So I guess like they're building a profile on me. Soon there will be a honeypot sending me a message on social media. There'll be a pretty Chinese girl sending me a honeypot. I'm not familiar with the grand solar minimum. Rob, China has created the largest credit bubble in the shortest amount of time. It took the U.S. an enormous amount of time to get to tens of trillions of dollars in credit. Many, many decades. China did it in 10 years. And there's people saying out there how China is self-sufficient. A lot of people in China consume a lot more protein now. If they're going to consume more protein, more pork, more chicken, more beef, and fish, then they're not going to be as self-sufficient. So theoretically, I was doing a good amount of research on this yesterday. Theoretically, China can feed itself, but that assumes that people in China don't eat any meat. So theoretically, China can grow enough grains for itself without having to import, but then once you start feeding animals to fatten them up for protein, then you have to import a lot more soybeans, a lot more grain. And China has to import an enormous amount of oil and energy. They really, from what my top China source said, in the last 6 to 8 months, one of China's major oil fields has come offline. So China has to import even more oil. And that's why there was a big spike early this year in oil imports, because China was importing more oil than usual because they had a major oil well come offline. So China's not self-sufficient. They have to import an enormous amount of food, an enormous amount of energy, and an enormous amount of metal and raw ore and materials to use. China is self-sufficient in rare earths, but that has come at a cost. They totally skipped all the proper environmental controls for rare earth mining, and I believe they did not do a good job protecting their soil and water and air around the rare earth mines. Supposedly, from what I heard, the coal barons in China have major influence with the government, and that's why China still uses a lot of coal. So China puts out these press releases that they're doing all this alternative energy, but that's just for mostly PR. In actuality, they still burn an insane amount of fossil fuels. And remember, they were supposed to have, I think by now, they were supposed to have 40 new nuclear power plants online to reduce coal usage. And post Fukushima, I don't know if they brought any online. I think they've all been suspended or delayed. Oh, I have a major problem with the agribusiness here in the United States. But they control the Department of Agriculture. What can we do? They've had control of it for decades. I mean, as a consumer, what you can do is just not buy a lot of your food from them. You buy local, you buy organic if you can afford it. The best thing people can do, because the political process is broken here in Washington, D.C. with Congress. A lot of these big both political parties are on board with a lot of these payoffs and lobbyists and stuff. The best thing people can do is vote with their money and go and look for the healthier food. Vote and find better food. U.S. consumers have a lot of debt, Dave, but the consumer in China had almost no debt 10 years ago, and it's increased a lot. It's now, according to the China presentation I did, about 50% of their GDP is household debt. And their household debt was, I think, 10% of GDP about 10 years ago. So it's up a lot. My point is all these major economies, all these major governments are all making enormous mistakes. And normally it's with debt and credit. I'm a big fan of the liquid fluoride molten salt thorium reactor. I've talked about it many times in the past. There is an enormous amount of above ground thorium, but I don't know if any government is taking it seriously for research and development. I heard a couple years ago that China had 1,000 PhD nuclear physicists researching it, but I'm not sure how far along they are. I think they're at least a decade away. They might be 2 decades away. Yeah, the air is really bad. If you see ADV China, Winston and Matt and Lawai86 and Serpensa, they talk about how many women get sick in China and have to have operations before they can have kids because of the water in the air. Apparently, there's a lot of people getting sick, and there's a lot of miscarriages and women that can't have kids in China. And they have Chinese wives, so... And I think their wives had problems having kids too, and had to have operations. There's enormous problems everywhere. I criticize every single government. The U.S. government is a disaster with its finances. The quantitative easing program is going to have to restart soon too. But a lot of the views of the gold community and the alternative media is just ridiculous. Yeah, so I'm a big proponent of liquid fluoride molten salt thorium reactor. There's been a bunch of TED Talks on it. There's the thorium remix, but unfortunately, I don't think Lifter's going to get any type of footing here in the U.S. It's going to have to be in another country. The U.S. Department of Energy is blocking it. From what I've heard from multiple sources, 100% blocking it. There's just no way anything will get approved. James is correct. In a world economy, no one will suffer in isolation. This is 100% correct. Watchman, Bill Holter was labeling me a crypto pumper, which is just ridiculous because if you listen to my content for more than 5 minutes, you realize I'm not a crypto pumper. Hey, I'm here to get you guys the best information possible. And that's why I have over 80 Patreon account contributors now and about a half dozen ones on PayPal. So if you feel like chipping in, that would be great. I can reinvest and grow my business and do things that I was planning on doing in the near future. Not going to spend like 5 minutes reading thank yous. My buddy Christopher Irons does that, and I think it's a little too much. I think it's a little bit too much reading a thank you list for everyone's names, or at least like a couple dozen people's names. I mean, it's his platform. He can do what he wants. I personally wouldn't do it. Over on the QTR podcast. Plant Doctor says he wouldn't buy any food commodity from China without certified third-party inspections. Yeah, I totally agree with you. I 100% agree with you. And Kyle Bass had the articles about this in the last month or so that U.S. ports caught tainted pork shipments that were imported here from China. They were trying to sell it to dog food companies. So thankfully, the U.S. port inspectors caught it, and the Department of Agriculture and the FDA shut it down. What's my prediction for RMB value by Christmas? I don't know. We'll see. I'm working on an interview with Kyle Bass. It takes time. He's a billionaire. He doesn't do interviews for everyone. It takes time to build relationships. Supposedly he listened to, from what I've heard, he listened to the Denny McMahon interview, who's the author of China's Great Wall of Debt, and he really liked the interview. That's what I've heard. So I'm working on building getting someone to vouch for me and then getting the interview. He normally only does like Real Vision Television and Bloomberg and CNBC, and maybe he did one for Yahoo Finance, and I don't know if he really liked that interview because they tried to spring like a hit piece article on him and trap him with questions about a hit piece article. So I'm not sure if he'll do another interview with that outfit again. I don't know if China's stocking up for a prolonged fight. Gavin, China increased soybean imports from Brazil by 8%, but China has Brazil over a barrel on a lot of negotiations. So, number one, Brazil's economy is not in that good a shape, and number two, China has been very influential in Brazil's economy for at least a decade now. Remember, after oil prices crashed to $29 a barrel in 2009, that China came in. China likes to do this. This is part of their key strategy. And when the oil prices crashed to $29 a barrel in 2008, when there was blood in the streets, remember, oil prices were in 2007, I think, at $147 a barrel. And by 2008, they had crashed all the way down to 29. And so China came in. China went to Russia. China went to Brazil. And China, when oil prices were at 29, China bought a lot of oil on long-term contracts for like 10, 15, 20 years, maybe even longer than that. They bought a lot of oil for above the spot price of oil. I think they paid over $10 a barrel higher to lock in the supply. And at the time, they were heavily criticized for doing the deals, but they were thinking smartly. But we don't know any of the other terms or loans or other stuff Brazil got in exchange for selling the oil. Yeah, if I get more likes, if I get more comments in the comment section after the video, that'll really help. More likes on this video. The U.S.'s trade deficit is coming down with China. The tariffs are perversely helping that. And Peter, China is running a current account deficit, and China's starting to run trade deficits now with other countries. China's running a large current account deficit now. And if you're familiar with current account deficits in emerging markets and dollar pegs and capital outflows, all those things eventually, once the capital outflows really start to increase, and that's why China has capital controls, not a good sign. Hey, Michael, China also now, because the economy is doing much worse in China, it's slowing down. There's now, the New York Times reported on this in the last 10 days. There's now over $200 billion worth of paper IOUs floating inside China. Those are people who are getting products and services, and they're issuing IOUs. Archangel, are you not a subscriber on my YouTube channel? I have not uploaded to iTunes in like 2 years, since 2017. March or April 2017, something like that. I interviewed Daniel Lacalle, and he confirmed that Kyle Bass is not the only one saying that China's running a current account deficit, which is very dangerous. No, I haven't put my podcast on other places in a long time. It's just on YouTube for now, because YouTube's the only one that pays me anything to post it anywhere. Even though YouTube, if I piss them off, YouTube could remove my ad revenue and take it almost down to zero, which they did for a long period of time. I'm making a little bit of money now, but I'm having to do an enormous amount more content. And who knows what could happen if I piss off YouTube? They could just pull it all away, which is why I'm trying to get more people on my Patreon and more people on my PayPal. Everyone doesn't hate me. A couple people are angry with me. As far as I know, it's mostly just one guy. But apparently everyone reads his blog, and they're saying that I like Bitcoin too much, which is funny because I hardly even talk about Bitcoin. Anyone who paid more than 5 minutes of attention to my work would know that. Hey, thank you for the $5 super chat, PR Coffee. What investments do you like? This is not financial advice, but I think if Brazil has its act together, they should continue to benefit from this trade war. So China has to buy food. That's priority number one, importing more food. So if they're not going to import mass amounts of soybeans from the U.S. and agricultural products from the U.S., they're going to have to import it from somewhere else. So there's a legit opportunity for Argentina, Chile, and Brazil to really grow their agriculture businesses. But like I've talked about recently, that a lot of the agriculture companies in Latin America have not done very well. They've underperformed a lot. China also imports a lot of food from other parts of Europe. I have this on what's the website here? The World Bank website, the World Integrated Trade Solution. So a lot of China's raw agricultural materials are from like Russia, Australia, Thailand. See here, I have agricultural raw materials up. We can go to foodstuffs, food products. Their food products they import from France, Netherlands, Peru, the US, and Australia. A good amount from all of them. Let me pull up how much ores and metals. So according to the World Integrated Trade Solution website, and I'll attach a link to it if you want to look up the data here yourself, for 2017, China imported around $195 billion worth of ores and metals. And the majority of it came from Brazil, Australia, Chile, Peru, South Africa. So they import a lot. They import a lot of raw materials, a lot of energy, a lot of food. Dave, every country is going to be a currency manipulator. We are in the race to the bottom. We are in the race to the base. We are in competitive devaluations. We are in currency wars again, and beggar thy neighbor. Hey, Bill, a lot of the dollars have come back. They've gone into asset prices. A lot of the dollars already have come back. They've gone into real estate, U.S. stock market, the general stock market, indices, and bonds. I haven't looked at waste management companies. In theory, they should be good because there's a lot of waste to recycle, but a lot of them are not necessarily run too well. If you're looking for capital, the reason to buy physical gold is not for capital gains. That's not financial advice, just my opinion. In my opinion, the reason to buy physical gold is not for capital gains. If you want capital gains, you should focus on the precious metal royalty and streaming companies and the gold stocks. The US has problems too, but most people in the gold community and the alternative media will not criticize China at all. China's importing gold. China doesn't have a debt problem. I hear that narrative all the time. China has reserves. China's running trade surpluses. It's a lot more complicated than that. Hey, Peter, I disagree with you. China's reserves could easily be wiped out by their dollar-denominated debt problems and their banking system crisis. And there is a lot of people in China that have the exact same false assumptions that the U.S. had from 2002 to 2007 that real estate prices never go down. It's the exact same attitude in China, but they built even more buildings, even more skyscrapers, even more houses. Ray Dalio is always like gold. I think he just said that people should own more gold. Ray Dalio has always liked gold. He's always recommended a certain percentage of gold in his portfolio. The Sam Zells, the Paul Tudor Joneses, those billionaires are the new billionaires to the gold club. Gavin, China can print over or paper over or bail out or wipe out some of its debt. That's the RMB debt. The problem for China is the dollar-denominated debt. Is the dollar-denominated debt. The other major problem for China is that the banking system is leveraged, and it's leveraged assuming the asset prices stay high. So China's banking system and their mortgages and their financial system is all massively leveraged, and it's assuming that real estate prices do not go down, and it's assuming the collateral is good, and those are false assumptions in my opinion. Is Ray Dalio a straight shooter? No, I don't think so. I think he just did a promotional video. I said this in the last few days for China. He disclosed this in his book Principles that he's been going to China for visits with billionaires and other key elites for like 20 years. And then Ray Dalio is a limousine liberal. He got a private meeting with the head of the European Central Bank, and then he was the one who egged Mario Draghi, the head of the European Central Bank at the time, to start doing quantitative easing a few years ago, 3 or 4 years ago. I've looked at that one. I've looked at friend of another and friend of another stuff. I don't agree with everything they say. So this went longer than I planned. I'll attach links to some of these articles if you want to take a look at it. But the bottom line is China's own data, not Bloomberg, not me, not CNBC, not some American journalist that can be slandered, came up with the higher food prices. China's own data from the National Bureau of Statistics. And the average food price increase in just the last year is 9.1%. There were other food prices that went up a lot higher than 9.1%. That's just the average. And from my experience with governments, what the governments tend to do is, whether it's the US or European Union or Japan or now China, they tend to underreport the real inflation, the real food price increases. And food price increases are a symptom or an effect of inflation. They are not the cause. Okay, guys, that's it for right now. I'll speak to you guys later. I am working on other content and other interviews. Everyone have a great week.